Hi, guys, and welcome to this panel discussion. James, I wanted to start with you and talk about AI. Abu Dhabi is investing large amounts of money into AI. Could you talk about the scale of investment going into AI globally and also in terms of Abu Dhabi specifically?
Yeah, sure. Hopefully the mic comes through okay. Maybe just on behalf of my panelists, first thing I would say is a huge thank you to your excellencies and distinguished guests for having us here. How big is it? The term that comes to mind if you watch movies and you know the 1980s movie Jaws, there's a scene where they say, after they see the shark for the first time, they say, we're going to need a bigger boat. That's kind of how big it is. When you go through and you do the math of it, this is bigger than shale. This is bigger than .com. This is bigger than, frankly, anything that we've seen within not just our careers, but generation. It's essentially the industrial revolution for us. Some of the math that we've done within the firm would tell us that we need roughly 120 gigawatts of data center capacity by 2030. To get that, you basically have to replicate New York City at peak power 10 times. And to do that, you need roughly $5 trillion. So it's really become the capital raising, the capital markets experience of our entire career. And just so that you don't think that we're doing banker math, that's actually a conservative number. Our research would tell us that if you do from a GPU build up, the 5 trillion is actually closer to 7 trillion. So it's a pretty substantial number. And then look, just in terms of Abu Dhabi and what's taking place here, there are really only a few places outside of the US hubs that you would think about really pushing into. This is one of those. It's the normal criteria. We've spoken about it a lot today. Obviously, abundance of energy, you have it. Abundance of capital, you have it. Data zones that are set up for connectivity, for cooling. Maybe the fourth one that I'll mention, and I think the one that's probably the most unique and special about Abu Dhabi is just the regulatory wherewithal, the intestinal fortitude to push in and get things done at speed, at scale. So it's a pretty unique time in terms of the size than what Abu Dhabi is able to do.
Interesting. And Hani, I want to bring you in here. We're in Abu Dhabi. Abu Dhabi is investing huge amounts of money into AI. How important will those investments be for the long-term trajectory for Abu Dhabi?
Yeah, and look, we heard Their Excellencies speak about this a little earlier today. Stargate, the 5 gigawatt capacity data center, exporting data capacity to a few thousand-mile radius that includes 50% of the world's GDP. If you think about all of the neighboring countries that are around us and their ability to develop their own capacity, you start very quickly getting to the concept of data being the new oil. You're exporting AI power through potentially AI embassies or data embassies to many countries around the region, and that becomes a cash flow generator for the country here. Look, I think the wherewithal and capacity, to James's point, is there. The intent statements are very clear. And I think the other thing that's unique to this region, and certainly we see it in spades here in Abu Dhabi, is that the powers that be can come together, align around a single strategy, and make that intent well-funded, well-capitalized, and pursue it with real motivation and conviction. We're seeing that happen here, and Stargate's a good example of it.
Yeah, it's interesting because when I think about Stargate, I think AI chips. And Salima, I want to bring you in here. The UAE recently got access to these super prized NVIDIA AI chips. How important is that going to be for Abu Dhabi to get ahead in the AI race?
Thank you, Alex. I think Abu Dhabi's access to NVIDIA chips, through the G42 is extremely important because it removes a key bottleneck for training and running large AI, models at scale. And as you know, the UAE is also heavily investing in big data centers, high performance computing, including AI campuses. So having and securing a pipeline of chips, for this, I think also moves this from being a plan into real capacity. And this is also not only about technology, but it's also about economic development, in my view. The UAE is also considering AI is the main foundation of new sectors such as digital services, healthcare, advanced manufacturing, fintech, and all of these, I think, is extremely important for the UAE's diversification from energy dependence. On the other hand, I think the partnership of Microsoft with the sovereign wealth funds is also a strong indication of the technology players' strong commitment, to sovereign partnerships who have strong AI strategies. And for us as HSBC, I think it's very valuable to support these kind of initiatives, and we believe this is where we bring value by linking these kind of technology partnerships with AI strategy.
We have 3 bankers on this panel, and we're talking a lot about AI and the investment into AI. James, I want to turn to you, and I want to look at how is this investment into AI and AI infrastructure changing the types of work that you do in terms of debt, equity, or other types of financing?
Yeah, it's a good question. So to answer a capital need of the scale that we're talking about, at least within our firm, we're talking about accessing capital in a totally different way than we used to. So you used to have silos or veins that you would work through: CMBS, ABS, investment grade, high yield, construction, even private capital. And to do something that has T's associated with it, 5 trillion, 7 trillion, we think that you need to reimagine the way that you're approaching capital raising. Within the firm, we recently put out an announcement where we created a group called Strategic Financing Solutions. And the concept of it is to cut across all of these capital buckets. We actually think that you can solve the capital need if you're accessing all of them and you're accessing them at the right time. I would say, just for this group, an underlying assumption within that is the businesses, the actual data centers, perform the way that they need to perform. Anytime you say that many sources of capital and a business performance that needs to sit underneath it, you know that they don't work perfectly. You know that there's going to be a hiccups, and so you have to be ready to manage yourself through that. But if you coordinate it the right way, it's different than yesterday's capital raising. It's new. It's all veins. All of them have to show up. If they all do, it'll be able to be done. Last comment that I'll make. Also associated with it, though, are some of the best capitalized companies in the world: Microsoft, Oracle, Google, Meta. But even if you look within those companies, the way that they're approaching raising capital is wildly different, even across those 4.
Interesting. And Salim, I want to bring you in here. Are you seeing a demand for new types of financial structures as we see this investment into AI?
Absolutely. It's totally different than 10 years ago. 10 years ago, when you look at the financing, it was mainly about the extraction and distribution. But right now, I think today the banks are mainly financing data centers, which form a larger part, of the new infrastructure. And as you would appreciate, these infrastructure, projects are massive. When you're talking about a large gigawatt campus for AI, this is costing around $8 to $13 billion. And it's almost impossible, for any single institution to finance all of this project on their own. And therefore, we can structure these kind of syndicated facilities. And we are also, I think, seeing a move towards more project finance type of, structure for these kind of project financings. In the past, a tech company would only borrow a corporate loan. But now, since, first of all, the sizes are extremely long, and then you have some involvement from technology giants like Microsoft or Google, you can structure these like, in the form of 10 to 15 years of like, project financing, similar to what we used to do on the power plant side. We have, as HSBC, we have done these kind of financings, especially in Asia. A recent example is a data center financing that we've done in Malaysia, and currently we are working on bringing these type of new financing structures into the Middle East as well. And I think another theme that we are seeing is that across the region, there's also a growing demand for structures that support cross-border technology partnerships, where Gulf investors back AI and data center projects in the US and Asia to also secure reciprocal investments into the GCC as well. And this is an area where we as HSBC are trying to play an important role.
Interesting. And I want to turn now to digital currencies and stablecoins. Abu Dhabi is investing large amounts of money into this infrastructure. Hani, I want to bring you in here. How important a role will stablecoins play in the financial ecosystem going forward?
Yeah, I think very important, but for a broader reason, and I'll bring it back down to your question of stablecoin. We think digital assets and actually the blockchain distributed ledger technology that supports it is going to be over time, and there's a question mark on how much time, is going to overtake traditional finance. And we see our role at BNY as partly around enabling the traditional to digital transformation and the interoperability between the two. Now, to create interoperability between the two, you need cash and cash-like instruments. You need to create tokenized instruments, and you need to create digital native assets. And we're in all of those businesses. Stable coins today, $190 to $220 billion worth of stable coins created so far. BNY is sitting as a reserve manager and custodian on a good 50% of those already. We think that industry can grow to 2 to 3 trillion by 2030. We will be an enabler of it. But really, it's to enable both more efficient and frictionless payments across borders, and to enable the delivery versus payment, so the payment component of delivering a digital asset, whether that's a digital mirror of a traditional asset or a digital native asset. Either way, it's going to be very important.
Okay, and James, I'm interested to get the view of JP Morgan and how they see digital currencies evolving. I saw JPM Coin recently got announced.
Sure.
Can you talk about how the bank sees this market going forward?
Yeah, I for a minute there, I thought I was going to dodge this one, because for those of you that know the gentleman that I work for, he's a little famous for some of his comments within the zip code. So you've got to start with the question of what's the problem that we're trying to solve, right? It's a client solutioning business. For many clients, the rails that are set up today, they work just fine. At JP Morgan, we move $12 trillion a day around the world. We actually broke a record, and we moved 15 trillion not too long ago over the summer. Things get settled 97% of the time within 1 day, 60% of the time within 2 hours. And so it works for a lot of people, but not for all. And some people need instantaneous settlement, and that's where the concept of blockchain comes in. So what we said is, what's the solution for a client that we're trying to solve? Most of the time, the pinch point, the bottleneck that our clients are experiencing, is going from traditional currencies into a public blockchain and then coming back out. That's where they're experiencing the pinch points. That was the reason for JPM Coin. So we set it up for our clients. It's a deposit token that works, we think, in a good way to help them go from traditional banking, enter into public chain, and then exit back out and do it in a stable JP Morgan-like way with the right KYCs that all of our institutions follow.
Salim, we've only got a few minutes left, so I want to end on you. Talking about stablecoins and digital currencies, often when we see Abu Dhabi, they're investing billions of dollars cross-border. Can you see a lot of those transactions happening on the blockchain rather than traditional systems?
I think the short answer is yes, but it has to be regulated, it has to be safe, and it has to be sovereign. So here, we are not talking about speculative cryptocurrencies. We are more talking about digitizing real money. And in this respect, the UAE, both the UAE and the Saudi, are both core participants in the project Ambridge. And this is a multi-central bank digital currency platform that uses distributed ledger technology to move funds instantly, between central banks and different commercial banks in different jurisdictions. And recently, we have seen a test of $22 million of payments being executed on this platform. So I think the most important thing is that this shows that it is technically possible to move money between countries almost instantly and at lower cost, but importantly, while keeping the central banks still in control, of the core banking system. As HSBC, we have been involved in Ambridge as a commercial bank participant, and we are also right now working on tokenized deposit solutions for institutional clients, including plans to expand the services in the UAE in the next couple of months. But this is going to be an increasingly important theme across the industry in the near future.
We have a couple of minutes left, and we have some really interesting people here. So I want to open the floor to you guys and get your views. We've spoken a lot about AI infrastructure spend and investment into AI and also digital currencies. Are you optimistic or pessimistic going into 2026 about the direction of this flow?
So direction of the world generally.
Investments into AI and the direction of more digital currencies.
Look, I think, first of all, there's been a significant amount of investment into AI this year in 2025. A lot of that investment has gone towards the US, call it $650 billion equivalent investments going into US equities from non-US investors this year. A lot of it may be concentrated in the big tech sector around data and AI. I think that we're going to continue to see a macro trend that says the same thing, but at the micro, it's going to be all about figuring out where are the cash flow generative, thoughtful, contract-based, energy supported investments, and where are going to be the investments that maybe to avoid. So at a micro level, there's going to be some blow-ups because too much money chasing, too few opportunities, if you will. There might be a lot of projects out there that one should look to avoid.
Maybe just to jump in. So look at the market. It's priced for perfection, right? In terms of execution, funding, go down the list. I mentioned you'll see hiccups. So you're starting from a place where you say, okay, perfection. We know that the long-term trend, this is our industrial revolution. We know that the countries that went into the industrial revolution first had a 100-year advantage. So we know that the long-term investor will be advantaged if they participate in this. But to think that there won't be hiccups along the way, and we've experienced it already. Think of what happened within Liberation Day. Think about what happened when the DeepSeek information came out. You can see these shocks hit the system, but long-term, progress will continue, and the long-term investor will win in the end.
Amazing. That is all we have time for.
The only certainty is that everybody is going to continue talking about AI in the future.
Yes. Amazing. Well, thank you so much for your time, and on to the next panel.
Thank you.
Thank you.